Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning for our financial, our investment, our retirement futures. He is president and founder of McIntire Retirement Services. Chris McIntire here to uncomplicate and clarify the financial world. And Chris, clarifying this financial world, it seems like it's pretty muddy waters here. There's a lot going on to try to sort through it and see through it all, but we're glad you're here to do it.
Certainly. I remember talking to my accountant one time, Peter, and he said, as long as the government makes changes, I've got great job security. And he was referring to himself. And I think that probably helps our industry as well. And we have a lot of different changes up and coming here, proposed tax pieces and whatnot that, has certain people on edge. Some people say this doesn't affect me. So, we'll break this down as we go through the show today, and hopefully everybody gets to pick up a piece or two anyway.
Yeah, there are a lot of things that are still in the proposal stage, just kind of suggestions or ideas that are included in that Build Back Better infrastructure bill package. And, they always cram a lot of things into each bill and sort of just piggyback them along. But there are several that have to do with changes to the laws, the rules around specific retirement accounts. So we'll talk a lot about that. We'll talk about, I guess, Chris, some year-end deadlines coming up pretty soon. We're closing in really quickly on the end of the year here. It's hard to believe how quick this year has flown by, but there are some things that if you are a proactive planner, you need to be thinking about and probably executing on actually well before the end of the year so they get completed by the end of the year. We're going to be talking about all of that and more on today's program. So don't go anywhere, ladies and gentlemen. Always valuable information to share here on your Game Plan for Retirement with Chris McIntire. And if you've got specific questions or you would like to find out more about any of the topics that we discuss, or you would like that comprehensive planning, review, and evaluation, the retirement strategy session, pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194, or you can also always go online to McIntyreRetirementServices.com, McIntyreRetirementServices.com. So, Chris, what are you hearing about or paying attention to that is what you feel relevant to the listeners that they need to know about these proposed tax law changes or changes to our retirement accounts?
Yeah, the Roth conversion and Roth contribution pieces here, things around the Roth IRAs, what's grabbing our attention, probably the number one issue here. There's some proposals that are, like you said, are being made that can have a substantial impact on, I guess for right now, what's being proposed, higher net worth individuals, if you will. But we're always cautious that that's where they start because that's how you have to get the legislation proposed. Then you can make amendments to it a lot easier. So, it's easy to say we're only going to pick on the wealthy, and then all of a sudden these other changes get inserted in there as it goes on. So, I'll let you feed me here, Peter. Maybe we'll take these one at a time. But, we've talked before about backdoor Roth IRAs. So, what's your thoughts? You want to go with that?
Well, yeah, and I want to second the premise that what starts with the wealthy a lot of times ends up trickling down. So, yes, a lot of the proposed changes are on those with $10 million or more in their IRAs, and that's not the majority of our listeners by any means, by any stretch, but some of the changes that they have already put into law have affected anyone with a retirement dollar, like the end of the stretch IRA, which happened a couple years ago, the changes to RMDs. So some of these proposals, they will end up affecting more than just those ultra wealthy, those with incomes of $400,000 or more, like Chris, the proposed end of the Roth conversion, that's a big one. And we know what tax rates are today. We know that in just a few years, they'll be changing. And so it may be really advantageous for a couple reasons to consider that Roth conversion now, possibly more than ever before.
Yeah, absolutely. The tax rates are low. This would be a time for this to become more of a front burner item for you. And, we talk about converting dollars from a traditional IRA account into a Roth account, and anyone can convert at basically any age as well. And so, primarily when we do Roth conversions, it's for people that are under the age of 72, because at age 72, you have those required minimum distributions from your traditional IRAs and 401ks. The amounts that have to come out for a required minimum distribution cannot be converted into a Roth. So you would have to take out more money than that. So primarily the ideal time for most folks to convert from an IRA to a Roth IRA is before they hit age 72.
Now, jumping around and possibly stealing a little bit of thunder from our conversation about year-end deadlines, but if we need RMDs, that's one we're going to talk about. And if we're going to make Roth conversions, that's another that we will mention in just a little bit. But Chris, we know that tax laws are changing, tax brackets and tax rates. Law already on the book. This is not a proposal. This has passed. This will happen unless something is done to continue what the previous guy did, and they turn around and say, "Oh, that guy was actually right. We need to continue his policies," which I don't think is very likely to happen. And unless it does, tax rates will go up in 2026. So we have a limited time with our current rates and brackets. And if we had like a $500,000 IRA, Chris, we probably wouldn't want to convert it all at once. But we have 2021, 2, 3, 4, and 5 with these current rates. Maybe we spread out a conversion of a significant amount of that over the 5 years that we have remaining. But if we miss the chance this year, it's only 4 years.
You're absolutely right, Peter. And you're referring to the tax cuts that the Trump administration had put in place that were only enacted for a 10-year time frame. And, that's how Washington works. When they say something's been made permanent, technically it's 10 years and then it has to be renewed again. It's not in perpetuity, if you will. And, I think the current administration certainly has a history of doing the opposite of what the previous administration does. That's the political environment we're in right now. And I
don't think that's specific or exclusive to them. I think it seems like every administration just undoes what the previous one did.
Yep. And that's very fair. And we're not getting into politics here by any stretch, but tax rates will sunset and go up, if you will, in like Peter says, in 2026. So again, we have done more Roth conversions this year for our clients. And, I would tell people right now to say, look, understand what tax bracket you're in and understand how much more money you can pull out of an IRA that is taxable and stay within that tax bracket. And then have the conversation with your tax professional, your financial professional. Give us a call at the office if you want a disinterested party to give it some thought as well. And, and then determine how much of that dollar amount do you want to take out and pay some taxes on. Because remember, if it's an IRA account at age 72, money's coming out of it anyway. So in a lot of ways, you're simply accelerating your required minimum distribution now into an account that is tax-free, and it's hard to beat zero.
Absolutely. Well, we know that we have to plan strategically. We don't want to bump ourselves into significantly higher tax brackets. Likewise, we don't want to bump our beneficiaries into significantly higher tax brackets. And in effect, Chris, that's what that ending of the stretch IRA potentially could do if beneficiaries receive inheritance that is tax deferred in an IRA account and they are now required to liquidate it within 10 years. That could potentially bump them up into a higher tax bracket than what they were allowed to do before anyway, the stretch IRA. So if we had plans previously created and crafted and constructed before that Secure Act was passed, we probably need to revisit that regardless of the additional tax planning or financial planning we are going to do.
Yeah, it's a great concept there, Peter, that, hey, I might be a beneficiary of a large IRA in addition to the IRA that I currently have. So, you kind of have to think forward here a little bit and be proactive, no question about it. And, and consider all of the tax implications, not only on you, but also on your potential beneficiaries as well. How much tax do you want them to pay at an unknown tax rate at some point in the future, when right now that if you convert it into a Roth, the tax rate on that is 0.
Yeah, we are talking income, investments, taxes, legacy, all items that are covered in the strategic planning review with Chris McIntire as he helps you craft your game plan for retirement. And if you'd like to take advantage of that opportunity, similar reviews in the construction and design of plan could easily go upwards of $1,000 to several thousands of dollars. But for radio show listeners or podcast viewers, Chris McIntire waives all fees or charges. This is a complimentary service so that you have a plan, or so that you can double check your current plan. Make sure that no stone is unturned, no problem is left unaddressed. Pick up the phone, give a call if you would like to take advantage of that offer and opportunity. 800-868-1194. That's 800-868-1194. 800-868-1194. So, Chris, as we are talking about a few of the year-end deadlines now, many of these need to be started well before the end of the year. They must be completed by the end of the year. And, unfortunately, the financial industry, much like every other industry, is a little slower because of coronavirus, because of staffing. And I know that you in your office, you're moving at light speed, but the institutions have to process these things by the end of the year. So, never a time where it's not beneficial to be proactive, but maybe now more than ever.
Correct, Peter. And remember, you're going to be dealing with an accountant, your financial professional, the institution that holds the assets, like a Vanguard, a Fidelity, a TD Ameritrade, and all their processing time. So, these things do take time. And, a lot of times we'll get notices from our custodians where the assets are held. In our case, it's TD Ameritrade by and large, that, here is the deadline to submit required minimum distributions. Here is the deadline to submit Roth conversions. And often that's mid-December, so that they have time to get those things processed. Because think about it, guys, and, for those of you that are in the required minimum distribution phase, and you take yours in December, how many millions of Americans only take them in December, or they make those qualified charitable distributions where they're giving money out to the churches. I mean, that's another set of complexity. And what I mean by that is anybody over the age of 70 and a half can take money from an IRA account up to $100,000 and have it paid directly to a charity that can satisfy your required minimum distribution. And it's also not taxable to you. So qualified charitable distributions, Roth conversions, a number of these things have to happen, pretty in about a 30-day time frame from the time you're listening to the show today.
Yeah. I mean, they must be completed by the end of the year. Many of these institutions have put a deadline in early to mid-December for getting the requests in. So start now, ladies and gentlemen. RMDs, Roth conversions, charitable distributions, contributions to your employer-sponsored plan. A lot of plans allow for you to really supercharge that and max it out at the end of the year, maybe put extra dollars away, but you have to make those contributions within the year, as opposed to like personal retirement account contributions, IRAs, Roth IRAs. Those contributions can be made up until the tax filing deadline, but with your employer-sponsored plan must be done within the calendar year. So again, all things to be proactive on, all deadlines that are coming up on us very quickly. Whether it applies to you or maybe a family member or loved one, give them a gentle push and reminder as well, just as we are doing here for you on this program. Pick up the phone, give Chris McIntire a call if you'd like to look these things over from a financial perspective and a tax planning perspective. Chris has a network of professionals that he can work work with if you do not already have one that you are working with, and he's happy to talk to them as well. But give a call, 800-868-1194. That's 800-868-1194. Chris, a little off script here. You mentioned that by and large, you utilize TD Ameritrade. Now, you are not exclusive to TD Ameritrade, and I think that may be something that is of interest to savers and investors and potentially beneficial. Can you sort of explain that arrangement and how or why you go the direction that you do, if you would, for just a moment? Do you mind?
Yeah, Peter. Yeah, I sure will, buddy. And, so TD Ameritrade for us is our trading platform. That's where we buy and sell securities, stocks, bonds, mutual funds, ETFs for our clients. And, that's all they do is they are an inventory place for us. Then we, have full independence to use any investment vehicle, for the right investor that fits their risk profile, if you will. And it could be a Fidelity mutual fund, a Vanguard mutual fund, a T. Rowe Price mutual fund, Janus, BlackRock, any of those pieces. We are independent, so we don't get paid by mutual fund companies. We don't get paid by TD Ameritrade. We get paid by our clients. We are fiduciaries. They pay us to manage their assets, not to buy and sell securities on their behalf. So we earn a fee to manage money, not a fee to buy and sell.
So those transaction costs, not necessarily anything that your clients there at McIntire Retirement Services need to worry about, because that is part of the included management costs there. And I know you're trying to provide a value, but as you look at some of the other institutions, Chris, is one of the reasons that you utilize TD Ameritrade more frequently because of that open architecture structure? I know, and nothing against any of these institutions or options, but at Fidelity, they've got like Fidelity funds. At Vanguard, they've got kind of Vanguard funds, and that's what you're going to find in those platforms or portfolios. Whereas you mentioned at TD Ameritrade, you could go out and get a Fidelity fund or a Vanguard fund, but TD Ameritrade does not have their own family of funds, correct?
That is correct. Yeah. So we do not work for TD Ameritrade or anything like that whatsoever. We are independent investment advisors. We use the services of Brookstone Capital Management that give us infrastructure pieces and investment research as well, and compliance issues to help us adhere to that fiduciary standard as well, accountability processes, things along those lines. So yeah, we are the true independents, and we enjoy that very much. We do a fair amount of business with independent life insurance companies as well, long-term care, annuities, life insurance, term insurance, all of those aspects as well. So we are truly independent on all those fronts.
Well, thank you, Chris, for that. I think that is of interest and importance to savers and investors to know the independent nature of how you operate, the fiduciary responsibility that you have to your client's best interest, the open structure and the architecture of where to house assets and what investment vehicles you have access to. Those are all kind of details that you will get into when the time comes on an individual basis. But it's good, I think, for people to know upfront just the way that you have structured your business and to the best interest of the clients that you serve. So ladies and gentlemen, again, if that is something that is of interest to you, if you don't want to feel as though your financial advisor is being told on high what specific products to sell or offer or to put in your portfolio, if you want a true non-biased, independent type of perspective to look at the risks that you're taking, the fees that you're paying, the taxes that you may be liable for, the investments that you hold, pick up the phone, give Chris McIntire a call. It's worth the time to invest for a financial review on a regular basis anyway, and he's offering it to you with no cost, no obligation. 800-868-1194. That's 800-868-1194. 800-868-1194. So again, Chris, as we are looking at these tax deadlines at the end of the year, I imagine you stay pretty busy in the final quarter. There are a lot of activity there at McIntire Retirement Services.
Yeah, I say that with a smile on my face. For those of you watching us on a podcast here, is because we have people that are wanting to know should they max out their 401k contributions, because they have to do that by the end of the year as well. IRA, Roth IRA contributions, you have until April 15th, so we get a little breathing room on that. Roth conversions, qualified charitable distributions, the regular required minimum distributions. We've done a fair amount of rebalancing here on investment portfolio. So yeah, it's been a busy going into the fourth quarter here, halfway through it. And, always the excitement of what's going to come out of Washington next, certainly keeps everybody on their toes as well. And, big tax changes, like the backdoor Roth, for example. I mean, that's another big one I kind of want to segue into, because that's something personally I have done for myself. And what we mean by a backdoor Roth, guys, is, let's say you've got after-tax contributions in your 401k at work right now. Many of you do, because you just put more money into it than you were able to deduct. Okay. And so we call those after-tax contributions. Right now, okay, as of the recording of the show, you could, if you retired, you could convert that after-tax money into a Roth IRA. Okay. And some of the proposed legislations is to stop that from happening. So, where that would impact people, and this isn't high income earners, this is everybody, is that, if you, said, well, look, I've been maxing out all my retirement plans. I got more money I want to spend or invest, I should say, so I can spend it in retirement. I'm going to throw an extra $10,000 into a non-deductible IRA. All right. I don't get to deduct the contribution, but all the earnings are tax deferred and I'll pay tax when I take them out. Well, one way is, all right, you open a non-deductible IRA and then convert it into a Roth the next day. That's what we call a backdoor Roth. And I've utilized that before because I cannot contribute to a Roth IRA because of income thresholds that are in there.
It's funny to me, Chris, that they prevent you from putting the money directly in the Roth, but that this strategy has been widely available and utilized. And the fact that current legislation being proposed talks about ending it, to me, that does nothing but legitimize the fact that this is a viable strategy that we have available to us today. It sort of gives definition to the fact that this is an allowable and open transaction to us now, but they are putting a moratorium on that, at least proposed, that they would stop allowing that transaction. What I find, Chris, is that probably indicates it's a beneficial move. It's something that we should be looking at whenever they're trying to make changes. Usually those changes that they're trying to affect and put into place usually are putting something that is in our best interest or that is available to us to a stop. So we need to look at that opportunity while we have it.
Yeah, you're exactly right. And, I think most of us would agree that, the current powers that be in Washington, the decision makers, have a different tax attitude than the previous administration did. That's probably a fair statement.
Yeah. And I would also say, Chris, that proactive planners need to pay attention to this window of opportunity that we have. It could be a limited time. And, there is I'll say older school of thought, paradigm mindset that continuing to defer and delay paying taxes is the best option. But if the goal that you have on your accounts is growth, then you are sharing that deferred growth with the IRS, and they are in fact the managing partner on your account. And if you don't believe that, just wait until the deadline when they start requiring you to take distributions to pay them off.
Yeah, absolutely. And, I think the conversion process is going to be around there for a while because, even in some of the reports we've been reading from our independent sources of information here, the government likes that, needs that source of revenue coming in. So, the backdoor Roths may get phased out, but right now we can still do Roth IRA conversion. So for those of you that have that traditional 401k, traditional IRA piece, we'll still be able to do some Roth conversions on that. And again, in 2026, income tax rates are going to go higher. So, we always encourage people, look, be proactive, and remember, talk to your kids and grandkids, because, the income tax rates now for the younger generation are low, where when you folks, most of you listening to today on like WLEC, for example, hey, you might be a little bit in the older generation where your mindset is, well, put money in your 401k, you don't have to pay taxes on it, on the money you put into it, you get to deduct that. It's like, well, that maybe made sense in the mid 1980s. Is that the argument we want to make in 2021 with a whole different tax environment? So you have to be flexible enough to, consider all the alternatives that are out there, given the tax history and the tax, complexities that we're going to be facing here as, at some point we pay down some of these bills that are getting rang up on the taxpayer credit card.
Well, again, if you would like to look at your individual situation and identify strategies that can help you keep more of your money and be more efficient with investments and taxes and the structure of your plan, pick up the phone, give a call. Chris McIntire here to help and assist. He is your resource, ladies and gentlemen. 800-868-1194. That's 800-868-1194. Now, to be frank and candid here, Chris, I really feel like some of these proposed changes don't necessarily make a lot of sense or impact. For instance, the elimination of contributions for those with mega IRAs. So if I have an IRA that's over $10 million, I can't add my additional $6,000. It doesn't seem like it would be a big deal to somebody with a $10 million IRA. It's like trying to plug the hole in the Titanic with a wine cork. But they do this because of exceptional cases. Like I think there was a guy, Peter Thiel, that made a $2,000 Roth IRA contribution and turned it into $5 billion because he invested in small companies he had ownership of that weren't publicly listed at the time. And so they find that one case, that one exception, and they sort of make a rule to try to eliminate it that has ripple effects and impacts on many, many other people, is the way to go about that, I guess, in Washington. Again, not trying to get political here, but Chris, some of the things that they are doing has people, I think, reasonably worried about not only taxes, but the stability of the market. And we've seen fantastic progress there, but a lot of people may feel a little uneasy about the amount of risk they are taking with their investments. That's also part of the review process and the strategy session there at McIntire Retirement Services as well.
Yeah, you're correct, Peter. And we haven't even gotten into the capital gains tax side of things here. And, it's hard to talk about taxes and everything where we're at now and not involve a little bit of politics. I mean, the reality is, we basically got one political party with running the House, basically the Senate and the presidency. So it's hard to say that these are bipartisan pieces of legislation. They truly are not. The only piece of bipartisan legislation we have out there is the original infrastructure package that they won't pass until the next spending bill comes. It's like, can't you pass that? And, that's something you all agree on. We can get that money going into the system. Isn't that in the taxpayers' best interest, and then argue about the next one that you want to do down the road?
Well, again, if you would like help, assistance, direction, if you would like to review and evaluate your current plan, your portfolio, your investments, or structure a plan and get one put together to help you confidently make the transition into retirement, move through retirement with stability in your financial situation so that you can live life and not have to worry about the plan in the background and how the money's working for you, pick up the phone, give Chris McIntire a call. That is the aim and the objective of having a game plan for retirement in place. And Chris is willing to help you put that together or double check and review yours. 800-868-1194, the number to call. 800-868-1194. 800-868-1194. And it was actually PayPal, Chris. Peter Thiel invested $2,000 in PayPal when it was 0.01 cents and turned $2,000 into $5 billion. And now everybody must pay the price.
Yeah. And, that sounds good that, they say they're taxing the rich and doing things like that. But like you say, it's one case in 300 million people, for crying out loud.
Yeah, it's a ripple effect that is going to happen there. And again, some of these things that are being proposed, we now know are aimed to give us a limited time opportunity. Some of the things that are already in law, though, may be more important. We know that tax rates are going to go up in the future, not just for the rich 1% or the mega IRAs, but for everyone across the board. Even the 12% bracket becomes the 15% bracket in 2026. So let's plan strategically now. We've got this window of opportunity where we may be able to pay less in taxes. I think that's something that everyone who's worked hard to save a dollar would agree is a good thing. And Chris McIntire can help you understand the strategies that will allow you to take advantage of these windows of opportunity and these important strategies. Give a call, 800-868-1194. That's 800-868-1194. He's standing by, looking forward to hearing from you. Chris, always a pleasure every time we get the opportunity to join you.
Hey, my pleasure. Hope everybody has a nice, safe weekend out there. Thank you for listening today. Take care.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.